Everyone's searching for the next Nvidia, but here's what most investors are missing. While the entire market is obsessed with one name dominating the AI chip narrative, there's a completely different layer of the artificial intelligence infrastructure that's being built right now, and the companies powering it are trading at a fraction of Nvidia's valuation with potentially even more explosive growth ahead. We're talking about the companies providing custom silicon solutions for hyperscalers, the pure play specialists building AI chips specifically designed for data centers, and the connectivity infrastructure that makes it all work together. These aren't wannabe NVIDIA competitors. These are companies solving entirely different problems in the AI stack, problems that have to be solved for AI to scale from millions of servers to billions of devices. The kind of opportunities where early investors in NVIDIA made generational wealth, and we might be seeing that same setup play out again right now. Today, we're diving deep into three stocks that could legitimately be the next NVIDIA, not because they're doing exactly what NVIDIA does, but because they're positioning themselves as the essential infrastructure for the AI revolution that's just getting started. Before we reveal these companies, let's talk about why the next NVIDIA won't just be another GPU manufacturer. NVIDIA's dominance in training large language models is well established, but the AI industry is evolving rapidly. We're moving from a world where everything runs on standardized GPUs to a world where custom silicon designed for specific workloads is becoming the norm. We're seeing the explosion of inference workloads which require different chip architectures than training. We're witnessing the build-out of connectivity infrastructure that can handle the massive data movements AI requires. The companies that win in this next phase won't be NVIDIA clones. They'll be innovators solving the problems that emerge as AI scales. Think about what made NVIDIA successful. They weren't the first GPU company. They weren't even the biggest chip company. What they did was position themselves at the intersection of gaming, data centers, and eventually AI with technology that became indispensable. The next NVIDIA will follow a similar pattern, being in the right place with the right technology as a massive wave of demand crashes over the industry. Let's address something critical about finding the next NVIDIA. When NVIDIA started its explosive run, most people didn't see it coming. The stock was trading at reasonable valuations, the company had good but not spectacular growth, and the AI revolution hadn't become obvious yet. The investors who made life-changing returns were the ones who recognized the fundamental shift happening in computing before it became consensus. We're at a similar inflection point right now. The market understands that AI is important, but it hasn't fully priced in how much infrastructure needs to be built to support AI at scale. Custom silicon for specific workloads, high-speed connectivity between chips and systems, specialized processors for inference rather than training. These are the picks and shovels of the next phase of AI, and the companies providing them are positioned for extraordinary growth. Our first company is Broadcom, trading under the ticker AVGO, and this is the custom silicon king that's quietly becoming indispensable to every major tech company building AI infrastructure. Broadcom isn't a household name like Nvidia, but if you use the internet, you're using Broadcom technology whether you know it or not. They're one of the world's largest semiconductor companies, but what makes them fascinating right now is their custom ASIC business. Application-specific integrated circuits are chips designed for one specific purpose, and in the AI world, that means chips custom designed for companies like Google, Meta, Amazon, and others who need something different than what Nvidia offers. These hyperscalers are spending billions of dollars developing their own AI accelerators because for their specific workloads at their massive scale, custom silicon is more cost-effective and power-efficient than buying off-the-shelf GPUs. Broadcom is the company actually manufacturing these custom chips. They've got the design expertise, the manufacturing partnerships, and the relationships with every major cloud provider. Their CEO has been explicit about the massive opportunity in AI custom silicon, talking about multiple customers each spending billions of dollars annually on custom AI chips. This isn't speculative. This is happening right now. Broadcom reported that their AI revenue is already in the billions and growing at triple-digit rates. What makes this so compelling is that as AI scales, the economics increasingly favor custom silicon for the largest deployments. Google's TPUs, Amazon's Trainium and Inferentia chips, Meta's custom silicon projects, all of this is being enabled by Broadcom. They're also dominant in networking, providing the switches and connectivity that make modern data centers work. As AI clusters scale to hundreds of thousands of accelerators, the networking becomes just as important as the chips themselves. Broadcom is positioned on both sides of this equation. The company also has a massive software business after acquiring VMware, which provides stability and cash flow, while the semiconductor side captures the AI wave. At current valuations, Broadcom offers something rare: exposure to explosive AI growth combined with the stability of a mature, profitable business with fortress-like competitive moats. If custom silicon becomes the dominant approach for large-scale AI, which increasingly looks inevitable, Broadcom could see its AI business grow from billions to tens of billions in annual revenue. The second opportunity is Marvell Technology, ticker MRVL, and this is the pure-play growth competitor that's betting everything on being the data infrastructure company for the AI age. Marvell doesn't have the diversification of Broadcom. They're laser-focused on data infrastructure semiconductors, which means they're a more concentrated bet on AI growth, but that concentration could drive explosive returns. Marvell provides custom silicon solutions similar to Broadcom, but they're also heavily invested in optical connectivity, which is becoming critical as AI clusters scale. Here's why Marvell is fascinating. They're working with every major cloud provider on custom AI accelerators. They're providing the electro-optics that connect AI systems at speeds that copper simply cannot achieve. They've got data center connectivity solutions that are becoming mandatory as workloads scale. The company has been transparent about the massive design win pipeline they're building, with multiple hyperscale customers each representing multi-billion-dollar opportunities over the coming years. What's particularly compelling is Marvell's position in optical connectivity. As AI systems scale to include hundreds of thousands of GPUs or custom accelerators working together, the data movement between these chips becomes a bottleneck. Traditional copper interconnects can't handle the bandwidth and distance requirements. Optical solutions are required, and Marvell is a leader in this space with their co-packaged optics and pluggable optics solutions. They're also working on custom accelerators for AI inference, which is potentially a bigger market long-term than training because every AI application that gets deployed needs inference constantly while training happens less frequently. Their partnerships with Amazon, Microsoft, Google, and others provide multiple shots on goal. Even if some projects don't scale as expected, they've got enough horses in the race that several wins could drive massive growth. The company's management has been aggressively repositioning the business toward AI and cloud, exiting lower growth markets to focus resources on the highest opportunity areas. This strategic focus means that as their AI business scales, it will represent an increasingly large percentage of total revenue, driving higher growth rates for the overall company. Marvell is also benefiting from the build-out of AI infrastructure at the edge, in enterprise data centers, and in telecommunications networks. It's not just the hyperscalers. Every company needs AI infrastructure, and Marvell is positioned to provide critical components across all these markets. The risk with Marvell is that they're more exposed to semiconductor cycles and competition than a more diversified player. But for investors who want pure play exposure to AI infrastructure growth, Marvell offers exactly that. Our third stock is Astera Labs, ticker ALAB, and this is the under-the-radar connectivity play that most investors have never heard of, but that's absolutely critical to making AI systems work. Astera went public relatively recently, and they're focused on something that sounds boring but is actually crucial: connectivity solutions for data centers, specifically focused on connecting AI accelerators to memory, storage, and networks. Here's the problem they solve. As you build larger AI systems with more powerful chips, moving data between components becomes the bottleneck. GPUs and AI accelerators are incredibly fast, but if you can't feed them data quickly enough or move their outputs efficiently, you're wasting expensive computing power. Astera builds smart cable modules, retimers, and other connectivity solutions that ensure data can flow at the speeds modern AI systems require. They've positioned themselves specifically for the AI infrastructure build-out, with products designed around the connectivity standards that AI systems use, like PCIe, CXL, and Ethernet. What makes Astera particularly interesting is their focus on intelligent connectivity. These aren't just dumb cables. They're smart devices that can manage signal integrity, handle protocol translations, and optimize data movement. As systems get more complex with disaggregated architectures where compute, memory, and storage are separated, Astera's technology becomes essential. The company has demonstrated explosive growth, with revenue increasing at triple-digit rates as the AI infrastructure build-out accelerates. They're working with all the major server OEMs and cloud providers, providing the connectivity fabric that makes massive AI clusters possible. Their products enable higher bandwidth, longer reach, and better signal integrity than competing solutions. Astera is riding multiple trends simultaneously. The transition to PCIe Gen 5 and Gen 6 requires new connectivity solutions. The adoption of CXL for memory disaggregation needs Astera's technology. The scaling of AI clusters to unprecedented sizes demands better connectivity. They're also well-positioned for the future, working on connectivity solutions for next-generation standards and emerging architectures. The company's market cap is small compared to Broadcom or Marvell, which means they have more room to grow but also more risk if the market turns or competition intensifies. However, their technical differentiation and strong customer relationships provide meaningful competitive moats. Astera represents a bet that connectivity will be just as important as compute in the AI era, and that specialized intelligent connectivity solutions will command premium pricing and high margins. What connects all three of these opportunities is that they're providing infrastructure that becomes more valuable as AI scales. Broadcom's custom silicon becomes more attractive as deployments reach scales where customization makes economic sense. Marvell's optical solutions become mandatory as clusters grow beyond what copper can handle. Astera's intelligent connectivity becomes essential as systems become more disaggregated and complex. These aren't companies hoping AI becomes important. They're companies already generating significant revenue from AI infrastructure today, with pipelines suggesting massive growth ahead. They're also diversified across multiple customers, reducing the risk of dependence on any single company's AI strategy. If Google, Amazon, Microsoft, Meta, and others are all spending billions on AI infrastructure, all three of these companies benefit. Now let's be brutally honest about the risks, because finding the next Nvidia also means understanding that many companies positioned for AI growth won't actually deliver Nvidia-like returns. The semiconductor industry is cyclical, and we could see a digestion period after the current infrastructure build-out. Competition is intense, with deep-pocketed players fighting for market share. Technology shifts could favor different architectures or approaches. Any of these companies could lose key customers or see products become obsolete as standards evolve. Valuations, especially for Marvell and Astera, already price in substantial growth, which means execution must be flawless. If AI growth disappoints or takes longer to materialize, these stocks could face significant corrections. Broadcom is more stable but also less explosive given its size and diversification. You're not going to see Broadcom increase tenfold in a couple years like early Nvidia investors experienced. Marvell and Astera have more upside potential, but correspondingly more risk. The path to becoming the next Nvidia requires not just being in the right market, but executing flawlessly over years while the market is still developing. It requires building technology that becomes indispensable, establishing customer relationships that create switching costs, and scaling production while maintaining quality and margins. Broadcom has already proven it can do this. Marvell is in the middle of that journey. Astera is earlier but showing promising signs. For investors willing to take concentrated positions in AI infrastructure, each of these represents a different risk-reward profile. Broadcom for those who want stability with AI upside, Marvell for pure-play growth exposure, Astera for small-cap explosiveness with higher risk. The AI revolution is still in the early innings. The infrastructure being built today will power applications we can't even imagine yet. The companies providing the picks and shovels for this build-out, the custom silicon, the connectivity, the specialized processors, these are the investments that could generate outsized returns over the next decade. Do your research, understand what you're buying. Recognize that finding the next Nvidia means accepting volatility and uncertainty, but also recognize that we're watching the build-out of potentially the most important technology infrastructure of our generation, and the companies building it are creating the opportunity for generational wealth. That's our deep dive into 3 stocks that could be the next Nvidia. Stay informed, stay disciplined, and never invest more than you can afford to lose.